Hello everyone. Here's something most people don't realise. The DWP and HMRC don't apply the same rules to you as they do to your neighbour, your sibling or your friend down the road. Depending on exactly when you were born, your state pension age is different, your options are different, and the mistakes that can cost you real money are completely different too. And right now, in 2026, there are people in every single age group either receiving less than they're entitled to or about to make a decision they can't undo, simply because nobody ever sat them down and explained the rules for their specific situation. Today, that's exactly what I'm going to do. Find the group that matches your date of birth, listen closely to what applies to you, and by the end of this video, you'll know exactly what to check and what to do about it. I'm Thomas Ashford, and here's why this genuinely matters. These rules change constantly, and when they do, the DWP doesn't ring you up with a personal explanation. They simply change the policy and expect you to already know. What I do every week is take these changes and break them down by exactly what they mean for your situation, before the deadlines pass and the mistakes are already made. If this is useful to you, hit subscribe now, because every group I'm covering today has something happening in 2026 that could directly affect them. Alright, let's get into it. Group 1. Born before the 6th of April 1960. You're 66 or older, and you've already reached state pension age. At this point, most people assume there's nothing left to check. That assumption is quietly costing some of you money every single month. The first thing to look at: have you lost a spouse? If your husband or wife reached state pension age before April 2016, meaning they were on the old state pension system, you may be entitled to inherit a portion of what's called SERPs, extra state pension they built up through years of work. Think of it as an extra pot they paid into on top of the basic state pension. Depending on their date of birth, you could inherit anywhere from 50 to 100% of it, adding hundreds of pounds a year to your pension, permanently. Here's why so many people miss this. The pension service only reviews this once you notify them of a bereavement. They don't proactively check whether everyone entitled to it is actually receiving it. If you've lost a spouse and never specifically asked them to check, that one phone call could add money you've been owed for years. The second thing for this group involves HMRC, and it's catching hundreds of thousands of people completely off guard. The full state pension this year sits at £12,547.60. The personal allowance, the amount you can earn before paying any tax, is frozen at £12,570. That's a gap of just £22.40. Any extra income at all, a small private pension, some savings interest, a bit of part-time work, pushes you into paying tax. And because your state pension arrives without any tax taken off automatically, HMRC sends what's called a simple assessment letter, telling you that you now owe tax, sometimes for the very first time in retirement. Over 1 million of these letters went out in a recent tax year alone, a huge jump from the year before. If one lands on your doormat, don't ignore it. The payment deadline is the 31st of January following the tax year, and if you think the figure is wrong, you have 60 days to challenge it. Group 2. Born between the 6th of April 1960 and the 5th of March 1961. You're turning 65 or 66 this year, and this is where the rules contain a shock that catches almost everyone off guard. Most people in this group grew up assuming 65 was the finish line. For decades, that was the traditional retirement age in this country. But the law has changed. For everyone born in this window, your state pension age is 67. Not 65, not 66, 67. That means if you were counting on payments starting around your 65th birthday, you actually have around 2 more years to wait. And here's what makes this genuinely concerning. People are leaving jobs and cutting their hours based on a retirement date that's simply wrong, leaving a 2-year income gap that was never planned for. Quick action step. Go to the State Pension Age Calculator on gov.uk right now and put in your date of birth. 30 seconds and you'll have the official figure, not an assumption. The second thing for this group, when you do reach your actual pension age, the payments don't start automatically. A letter arrives roughly 4 months beforehand inviting you to claim. If you ignore that letter, your payments simply wait until you respond. And here's the part almost nobody knows. You can only backdate a late claim by up to 12 months. Every month beyond that is money permanently lost. So when that letter arrives, act on it straight away. Group 3. Born between the 6th of March 1961 and the 5th of April 1977. You're somewhere between 49 and 65. Your state pension age is 67. And right now, the most important things for your group are the corrections you can still make that will directly increase what you eventually receive. The first is your national insurance record. Think of it as the puzzle pieces that decide exactly how much you get paid each week. You need 35 full years of contributions to get the complete new state pension. Gaps, years out of work, years abroad, years raising children where credits weren't automatically applied, leave missing pieces, and each one permanently lowers your weekly payment. The good news, you can still fill them in. Voluntary contributions cost somewhere between £900 and £960 a year, depending on which year you're filling, and each year you buy adds roughly £6.89 a week to your pension, for life. Over a 20-year retirement, one purchased year alone can return over £7,000. You can normally go back and fill gaps from the last 6 tax years. Before paying anything, though, always call the Future Pension Centre first to confirm that filling a particular gap will actually increase your payment. Sometimes it won't, and there's no point spending money on something that changes nothing. The second thing for this group is marriage allowance, and the numbers here are honestly staggering. Millions of eligible couples across the country have simply never claimed it. Here's how it works. If you're married or in a civil partnership, and one of you earns under £12,570, that partner can transfer part of their unused personal allowance to the higher earner, cutting their tax bill by £252 a year. And you can backdate this for up to 4 previous tax years, meaning a couple claiming for the first time this year could recover over £1,000 in one go, plus £252 off this year's bill, all from a single 10-minute application done for free directly through gov.uk. Please avoid the paid claims companies. They'll take a large chunk of your refund for something you can do yourself in 10 minutes. Group 4. Born after the 5th of April 1977. You're under 49. Your state pension age under current law is 68, and there's a real possibility that figure gets pushed later still for younger people in this group. That's not a reason to panic, it's a reason to act now, while the most powerful savings tools available to you are still wide open. First, same principle as before. Check your national insurance record now, while you've still got years ahead of you to fill any gaps affordably. It takes about 5 minutes on your personal tax account. Second, the ISA. The annual allowance sits at £20,000 this tax year, and every pound inside it is permanently shielded from income tax and capital gains tax. Interest earned inside an ISA doesn't count towards any of your other allowances, doesn't affect your personal allowance, and generates no letters, no tax code changes, nothing. With the personal allowance frozen for years now, more of your income gets quietly pulled into the taxable zone every year through inflation alone, so sheltering your savings inside an ISA is one of the simplest, most effective things you can do for your long-term position. So here's your quick summary, by group. Born before 1960. Check for inherited SERPs if you've lost a spouse, and never ignore a simple assessment letter. Born between 1960 and early 1961, your pension age is 67, not 65, so confirm your real date today. Born between 1961 and 1977, check your national insurance record for fillable gaps and claim marriage allowance if you haven't already. And born after 1977, check your record now while it's cheapest to fix and make full use of your ISA allowance. If this helped you make sense of where you stand, hit subscribe so you don't miss the next one, and tap that bell icon so you're notified the moment it's up. And please, share this with someone in your life who falls into one of these groups: a brother, a sister, a neighbour, a friend, because one conversation like this really can make a difference to someone's retirement. I'm Thomas Ashford. Take care of yourselves and take care of your money.